How you doing, everybody? This is Martin Mesa with Rate One Financial. Welcome back to Mortgage Mind. And today's video is called No Cost Refinance, Common Misconceptions. If any of you guys are out there homeowners and you've ever tried to get a refinance on an existing loan you have on a property, you probably know about a no-cost refinance or a no-point, no-cost loan. It's basically a refinance, and for those of you who don't know, a refinance is a new loan you get from a mortgage company that pays off an existing loan. And usually you do that because rates are lower, so you can exchange a higher interest rate for a lower interest rate with the new loan, which usually will lower your payment. And so and usually there's closing costs involved with that new loan, but a no-cost refinance means that the lender that you're getting the new loan with actually covers all those costs for you, so you don't have to pay for it, which is a beautiful thing because if everything else makes sense, it's a no-brainer, right? Because you're not having to pay for it, so there's very little to lose. So, but the common misconception about a no-cost refinance is just because it's a no-cost loan, which it truly is, doesn't necessarily mean you won't have to pay certain things at the closing of the new loan. You usually still have to pay things like taxes, insurance, HOA dues, if it's a property with an HOA, and you're gonna have to pay interest on the new loan for the day you close or for the month you close, okay? So those are still things you have to typically pay at the closing of a no-cost refinance. But those aren't really costs, because whether you refinance or not, you would eventually pay those taxes, insurance, interest, and HOA fees eventually. So they're not really costs, because you gotta pay them eventually. But the lender's not going to cover those things in a no-cost refi. So you still have to pay for that stuff because that usually gets charged at closing. Those prepaid things is what it's called. So be aware of that. And in my opinion, whenever I'm doing a no-cost refinance for a client of mine, I always recommend they pay those things at closing out of pocket if they can all do that. That way they're not financing any of those things into the new loan amount, because I'm not a big fan of financing things you would have eventually paid anyway. So by not financing those things, we minimize the new loan amount, because we don't have to add those costs into the new loan amount. So we minimize the new loan amount, which maximizes the payment reduction that comes with the no-cost refinance. So that's how I do it, and I do it that way because, like I said, it minimizes the new loan amount, which minimizes the new payment. And one thing I haven't mentioned is usually if you have an impound account with your current lender, meaning your taxes and your insurance included in your current payment, when we refinance that loan, you're going to get a refund back from that old lender, which sometimes it's almost a wash. Whatever you're paying for the new loan for taxes and insurance, you get it all or most of it back from your old lender. So sometimes it's just a wash. Anyway, you can talk to you can talk to your loan officer more about that way to do it, but that's how I usually like to do it with my clients. I think it's the best bang for your buck. So anyway, that's the misconception that comes with no-cost refinances, but now you know. All right, so hopefully that's helpful. Take care, and thanks for watching. We appreciate it. We'll see you at the next episode of Mortgage Mind, and if you like what we're doing, please like and share this with your friends and family. Have a great day.